Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the market site in Times Square, New York City, we have Dave Epstein. He's the CEO of Merlyn.AI. We're going to take a look at the paradigm shift in an ETF, ticker symbol SNUG, SNUG. It's great to have you with us at market site. Welcome. Paradigm shift in ETF design, that's a pretty big statement. Tell us more about SNUG, how it's different from other ETFs.
Yeah, well, SNUG is a completely new, different way of looking at designing an ETF. It's a paradigm change, if you will. ETFs generally have been very focused. They're focused on, maybe a sector or a theme or a factor or an asset class or whatever. But we don't look that way at the market. SNUG is a self-contained portfolio management system in an ETF wrapper. So we look at 400 different ETFs and select some of those to give what investors want. And what do investors want? They want to have the momentum leaders in a bull market. They want to have the defensive leaders in a bear market. They want to have some automated and smart expert way of figuring out when it's a bull, when it's a bear market. They would love to have a tactical system that's tax efficient in being able to trade with better tax treatment. And most of all, both traders and advisors want to have it all automated so that they can do more important things with their lives.
That's a lot to put in an ETF wrapper. So tell us more how SNUG is constructed.
So SNUG is constructed as as an ETF of ETFs. And it builds its thing by looking at 400 different ETFs and looks at momentum leaders in each one of those, a diverse set of classes. Mm-hmm. So we take those 8 and approximately 8 selected ETFs, and in a bull market we emulate something that might look like a 30-70, a 30% equity and 70% bonds kind of investment portfolio. And then when it goes into a bear market, which is automatic, it automatically switches into approximately 100% into bonds or either bonds or treasuries or gold in a defensive measure.
And so you're using artificial intelligence, AI, and is that what the adaptive tuning and fuzzy logic is when it's able to make those switches?
Yeah, actually, we use a bunch of different tools, and the tools are created so that we come up with what we call a temporal portfolio theory, and that is that the first thing the tools does is removes the noise in the marketplace. Markets are very noisy, and that's one of the biggest problems is whenever you try to look at trends or whatever, if it's a noisy environment, you can't figure out those trends, so you try to bring the signal up, if you will, and that's signal to noise theory. So first, it takes care of the noise. And then we put in a set of 3 or 4 different AI tools to figure out where is it going to go from here. And we try to find out where the momentum is. So you mentioned adaptive tuning. Adaptive tuning looks at how things are happening, and it's learning as it's going, and what kinds of next instruments it should be buying based on adaptive tuning. There's a second thing is genetic algorithm. And a genetic algorithm works like genetics in the animal world. So we cause mutations and look at whether it's getting better or worse, and we take the survival of the fittest. And so it will continue over generation and generation and continue to improve over time. And you mentioned fuzzy logic, which is kind of a funny word, but it actually is a technique, an algorithm that helps us figure out whether we're in a bear market or going to a bull market or vice versa.
Sounds like you need an engineering degree. So how does SNUG manage risk then?
So risk is really the name of the game. Risk is something that my co-founder, Scott Judds, wrote a book on. In fact, you're Conquering 7 Faces of Risk. So this is all important. To reduce the risk, there's many different ways that we do it, but some of the ways that are most obvious is we use ETFs instead of going for stocks so that we get rid of single stock risk, for instance. We choose 8 different strategies so that we get rid of any one strategy risk. We're choosing momentum leaders, so we're avoiding the laggards in the market. And we're figuring out whether we go into a bull or bear. So these are all different ways that we handle risk.
So how would SNUG actually detect a bear market, in the market environment we're in right now is probably a great test right now for SNUG. So tell us about that, like how you actually detect and avoid bear markets.
That's a great question. So there's many different, I think we use about 14 different indexes to figure out which way we're going. There's three main categories. One of them is the price trend, of course, which way is the market moving in one direction or another, or a particular ETF is moving. The other one is the momentum of that price trend. So what's the volume look like, and how much conviction is there in the movement of it. And the third one is some value sentiment based on what do the highs look like and what do the lows look like. And those three main categories and some others we put together to try to figure out whether we're going into a bull or bear. You mentioned where we are right now, or something that's fast. What we don't do is act very quickly, because we don't want to get the feared whipsaw effect. So whenever something happens, we're a little bit more patient to make sure that we don't make a big mistake and miss something on the way in one direction. And when you really do go into a bear market, they last for months. They're not lasting for days. And so it's okay to not jump every single time you see something. Wait until the trend really shows itself.
All right, now you also have ticker symbol WIZ, and they're kind of similar. Explain the differences.
Oh, very, very good, thank you. So Wiz has been out for a little while. We put that out back in October. It is similar in the idea that we use the same momentum algorithms and the same AI, but Wiz approximates an 80% equity, 20% in the bonds area, and SNUG is a more conservative one, which we all would like right now, and that's in a 70% bonds and 30% on the equity.
And I think that's where the robo-advisor attribute comes into tickers like SNUG and Wiz, especially in environments like this. It's like having a helping hand as you're trying to manage your portfolio.
Yeah, and the wonderful thing about these Merlyn.AI ETFs is that robo-advisors, a lot of them are very passive. They tell you what to do and you go do it. And SNUG is all automated. You just put your money in there and it will move it into the right place at the right time.
All right, Dave, thanks so much for joining us at MarketSite.
Thank you.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.